You are about to hear about 3 insurance products that are designed to look like safety nets, but are actually financial traps. The first one is sold by banks when you sign a mortgage. The second one is offered on your credit card statement. And the third one is pitched at the checkout counter when you buy a new laptop. Combined, these 3 products waste over $40 billion a year from the pockets of people like you. And the worst part? They cover almost nothing. Today, I am naming names. 3 insurance products you should never buy, ever. By the end of this video, you will know exactly why these products are overpriced, what you should buy instead, and how to protect yourself without wasting your money. This is not theory. This is your rent, your grocery bill, your kids' education. Real money staying in your pocket. I will show you how insurers prey on fear and the simple alternatives that give you better protection for pennies on the dollar. Do not skip the second product. That one tricks even smart people. Let me start with the first overpriced product, mortgage life insurance. You are sitting at the closing table, signing papers for your new home. The loan officer says, for just a few dollars a month, you can protect your family from losing the house if you die. It sounds responsible. It sounds caring. But here is the truth that no one at the closing table will tell you. Mortgage life insurance is a declining benefit policy. Your mortgage balance goes down over time. Your death benefit goes down with it, but your premium stays the same. You pay the same amount every month for less and less coverage. Worse, the beneficiary of the policy is the bank, not your family. If you die, the insurance pays off the mortgage. Your family gets the house free and clear, but they do not get a penny of cash. If your family wants to sell the house, they cannot access the insurance money. It goes straight to the lender. A term life policy, on the other hand, pays your family a lump sum. They can use it to pay off the mortgage, or to pay for living expenses, or to invest. The choice is theirs. And term life is often cheaper than mortgage life. A healthy 35-year-old can get a $500,000 20-year term policy for about $25 per month. That is often less than what banks charge for a declining mortgage policy. Do not buy mortgage life insurance. Buy term life instead. Name your spouse or a trust as beneficiary. Give your family options, not obligations. Now, here is the pattern interrupt that most people do not know. Mortgage life insurance has a pre-existing condition waiting period. If you have a health issue, they can deny coverage. But they will not tell you that at the closing table. They will just add the premium to your monthly payment and hope you never read the fine print. Avoid it. The second overpriced product is credit card payment protection insurance. You get your credit card bill. There is a small checkbox. For a small fee, we will cover your minimum payment if you lose your job, become disabled, or die. It sounds like a safety net. It is a trap. Here is how it works. You pay a monthly fee, usually $1 to $2 per $100 of balance. If you have a $5,000 balance, that is $50 to $100 per month. And what do you get? They will cover your minimum payment, often around 2% of the balance, for a limited time. That means if you lose your job, they might pay $100 per month for 6 months. That is $600. But you have been paying $50 per month for 5 years. That is $3,000 in premiums. You paid $3,000 to get $600 back. That is a terrible deal. And here is the kicker. Most credit card payment protection plans have exclusions. If you are self-employed, they often deny your claim. If you are fired for cause, they deny. If you have a pre-existing medical condition, they deny. A study by the Consumer Financial Protection Bureau found that less than 20% of premiums paid for these plans are ever paid out in claims. That means for every dollar you pay, the bank keeps 80 cents. That is not insurance. That is a profit center. What should you do instead? Build an emergency fund. 3 to 6 months of living expenses into a savings account. That will cover your credit card payments if you lose your job. And it does not cost you any premiums. If you cannot build an emergency fund, buy a standalone disability insurance policy. That pays a monthly benefit if you cannot work. It is more expensive, but it provides real protection. Credit card payment protection is a waste of money. Opt out every time. Now the third overpriced product, extended warranties. You are at Best Buy, Curry's, or any electronics store. You buy a new laptop for $1,000. The cashier says, for just $120, you can get a 3-year extended warranty. It sounds like peace of mind. But here is the truth that the cashier will never tell you. Extended warranties have a payout ratio of less than 20%. That means for every dollar you pay, the company pays out less than 20 cents in claims. The rest is profit. Compare that to health insurance, which pays out 80%. Extended warranties are 8 times more profitable for companies. You are not buying protection. You are buying their yacht. And the coverage is full of exclusions. Most extended warranties do not cover accidental damage. They do not cover liquid spills. They do not cover wear and tear. They cover only manufacturer defects. But manufacturer defects almost always show up within the first year, which is already covered by the manufacturer's warranty. So you are paying for duplicate coverage. And here is the secret that most people do not know. Many credit cards offer free extended warranty protection. If you buy your laptop with a Visa, MasterCard, or American Express, your card may add 1 to 2 years of warranty coverage at no cost. You do not need to pay the store for it. What should you do instead? Self-insure. Take the $120 you would have spent on the warranty and put it in a savings account. Do that for every major purchase. Within a few years, you will have a repair fund. If something breaks, use that money to fix it. If nothing breaks, you keep the cash. That is the opposite of insurance. That is wealth. Let me give you a real-world example. A family in Ohio bought a $2,000 refrigerator with a $300 extended warranty. The refrigerator broke after 2 years. The warranty company sent a repairman, but the repair cost only $150. The warranty company paid, but the family had paid $300 in premiums. They lost $150. If they had self-insured, they would have kept the $300, paid the $150 repair, and pocketed the remaining $150. That is the math of extended warranties. Now let me talk about the UK and Canada. In the UK, extended warranties are also overpriced. The same self-insurance strategy works. In Canada, credit cards often offer extended warranty protection. Check your card's benefits. Do not buy the store's plan. Let me recap the 3 overpriced products. Number 1, mortgage life insurance. It declines in value, pays the bank, not your family, and is often more expensive than term life. Buy term life instead. Number 2, credit card payment protection insurance. It pays a pittance, excludes most claims, and costs a fortune. Build an emergency fund instead. Number 3, extended warranties. They duplicate manufacturer coverage, exclude common problems, and have terrible payout ratios. Self-insure or use your credit card's free protection. Here is what I want you to do right now. Go check your credit card statement. Look for a charge labeled payment protection or balance protection. If you see it, call the bank and cancel it today. Then go to your mortgage statement. If you have mortgage life insurance, cancel it and buy a term life policy. And the next time you buy an appliance or a laptop, say no to the extended warranty. Put that money into your savings account instead. You will be thousands of dollars richer over your lifetime. If this video saved you from wasting money, hit the like button. It helps more people avoid these traps. Subscribe and turn on notifications so you do not miss my next video, which is called the one insurance product that is actually worth the price. And comment below. Have you ever bought any of these 3 overpriced products? Share your story. I read every comment. Thanks for watching. Now go cancel that junk insurance. See you in the next one.